Oh man, Apple joins the fray as well. No more hiring at Apple outside of R&D. Oh, and what are the numbers that we need to know before tomorrow morning, and what is all the madness going on? It's gonna be what you find out in this video. Well, just a day after Jerome Powell tells us that we need to see job openings come down, we have a whole host of new layoffs, and this begs the question, is this the beginning of the end? That is, the beginning of the end of the stock market pain because maybe we'll finally see the jobs market back in balance? Or is this the beginning of the beginning? That is, the beginning of the real crash? Is the economy just so strong that now the Atlanta Fed GDP tracker is suggesting GDP has moved up from 2.6% to an annualized rate of 3.6% as of just an hour ago, meaning that the Fed's work is truly just beginning? Well, folks, let's talk, because there's a lot going on. And in this video, we'll also talk about what recommendations there might be to help you get through some of the madness. Amazon has announced pausing hiring of corporate workers. Opendoor is slashing 18% of its workforce as its home flipping business is home faltering. Lyft is laying off 13% of its corporate workforce. Stripe, the fintech darling that almost went public but didn't, is looking to lay off 14% of its workforce as it prepares for leaner times. Keep in mind all of these announcements just in the last 24 hours. Twitter, thanks to Elon Musk, expected to lay off 50% of its workforce. Goldman Sachs expecting new layoffs. Chime, a digital banking company, expecting a new round of layoffs. Galaxy Digital, 20% layoffs. Intel has, and this one's older, the other ones have all been within the last 24 hours, but Intel told us in their earnings report that they were planning on saving $3 billion, potentially cutting as many as 24,000 jobs if you just sort of divide $3 billion by what you would expect wages to be. They have 121,000 employees, so this makes sense. Seagate Digital, the hardware company for like storage drives, they're firing 3,000 people. Upstart is getting rid of 140 hourly employees. Airbnb is doing well, but talks about how they have a Navy SEAL style group of employees, and they're working their employees harder, basically, was what they're saying. And the creator of NBA Top Shot just announced laying off 22% of its workforce, along Robinhood also looking at rapid cost reductions. While at the same time as all these layoffs are happening, you still have employees who have a hard time making ends meet, like employees over at Disney World. Supposedly the happiest place on earth, but unions are fighting to get just $18 an hour or about $37,000 a year in pay with a full-time job. All of this happening at the same time as now we're starting to enter what could end up being called the season of discounting. Aldi and Walmart are now announcing Thanksgiving price rewinds, so that way society believes the pricing they're offering is back to 2019 pricing. Yeah, apparently inflation has been so bad that if we just compare to 2019, it actually sounds like a good deal. We have a jobs report coming out at 5:30 a.m. California time tomorrow morning. I expect to be covering that live. And we have break-evens finally plummeting thanks to Jerome Powell's insane hawkishness last night. Break-evens finally, well, I guess I shouldn't say plummeting, but they're moving back down in direction, which is good. In fact, if you look on screen here, you can see break-evens finally ticking down after yesterday's disaster meeting, which is actually a good sign for inflation expectations at the market level to be rotating back down. It reiterates the seriousness of the Federal Reserve's work, and usually break-even inflation rates forecast what inflation is going to do about 3 to 4 months out. So we're at that 3 to 4 months out now where we should be seeing about that June drop in inflation break-evens show up in the CPI report coming out next week. That would be wonderful and would be quite bullish for markets, but we don't want to talk hopium, we want to talk reality. And the reality is, all of these layoffs are absolutely wonderful. the more of these layoffs we see, the more of these people either go on unemployment, but probably you don't want to have big gaps in your employment, because if you do get laid off, you should get a job as quickly as possible, not try to coast on unemployment, but get a job as quickly as possible, so that way when you try to go qualify to buy a home in 1 or 2 years, when the housing market gets to a lower level, you don't have a big gap in your employment. So if you get laid off, go get another job, and most people will probably get another job. If we get millions of people who get laid off, but then pick up a new job, thanks to all these job openings, we could finally see the job market come back to balance. But before we get into the next part, I want to thank today's sponsor, MooMoo. MooMoo is an advanced one-stop trading app that makes it easy for traders to do any and everything that you need. One of the main reasons MooMoo is amazing over other platforms is because they offer the ability to trade globally, meaning I could trade in Hong Kong and the US markets all from the same platform, no logging into other platforms. What a headache. MooMoo also offers industrial chains which provide a detailed picture of trending industries like semiconductors or EVs. And I don't like headaches, that's why I like MooMoo, keeping things simple. They give you access to heat maps as well, so you can easily visualize trends from the entire market at a single time. And trust me when I say these types of visualizations offered by MooMoo make understanding market trends so much quicker. MooMoo also gives you real-time quotes, so you can be sure the price you're seeing is an up-to-date one. This feature is especially useful when you want to make sure you have up-to-date pricing. Again, earnings, foreign markets, you name it, you want up-to-date pricing. And after hours is a great time to have up-to-date pricing. It also helps you predict open market direction and allows you to act quickly on news that occurs when the exchange is closed. So sign up via my link down below, open a new MooMoo trading account, and get $10 cash back for every $100 deposit that you make, up to $50 totally for free. Use the link. So what are we expecting at 5:30 tomorrow? And then what should you do about it? Well, 5:30 tomorrow, we're expecting 195,000 non-farm payroll jobs. That estimate has actually been revised down. Unemployment rate to move up 0.1% to 3.6. Average hourly earnings, 0.3%. Stable year-over-year inflation for wages, 4.7%. And we're expecting labor force participation at 62.3. If we get any kind of number, basically, with the change in non-farm payrolls above like 225, people are gonna be nervous. Now, we're hearing about all these layoffs, and unfortunately, this government data is just so freaking slow. It's frustrating because we know inflation now is trending down. We know jobs are trending down, but it's gonna take some time for it to show up in the data. I hope we get some glimmer of hope tomorrow, and if we could just get a bullish number like 80,000 jobs created, and then all of a sudden it's like, oh, the economy is softening, oh, and then the next 3 reports be like that, oh man, we're going to the moon. And layoffs help us get to the moon. And what are we seeing? The fact of the matter is, if right now, today, you open up a private browser and you just type in cnbc.com, look at the headlines. Amazon pauses hiring, Stripe lays off, Lyft cuts 13% of workforce, NBA Top Shot maker, right? Like, everything is about job cuts today. And it's a good thing. This is literally what you want if you are bullish about the future of America. And it sounds crazy because it's like, how could you say that in one sentence? Like, oh, let's be bullish on America, but let's see people lose their jobs. They just got to go find something else. That's the way it works. But those job losses are exactly what we need so we can finally get weaker job reports and we can finally start seeing a reduction of the risk that a wage price spiral forms, which ends up meaning that we have to get Paul Volckered, where Jerome Powell raises interest rates not from 4% to 5%, but from 5% to 10%. That's when we go into a really depression. So these layoffs are exactly what we want to see. And layoffs usually lag a recession. That is, you get layoffs and the unemployment rate tends to go up with a lag in a recession. These are probably the lags that Jerome Powell is expecting to see, and this is a good thing. Now, it's good for markets. Again, it's bad when people lose their jobs, but my recommendations for everyone, whether you're somebody who might get laid off or you're somebody who has a stable job, are the following. Make sure you do whatever you can to quickly transition to a place of employment security, because I believe there's a high likelihood we could see the unemployment rate rise to a level where when a lot of people get laid off and take the job openings, when the next round of layoffs come, it's gonna be even harder to get that job. And soon we're gonna be moving into a market where it's harder and harder to actually find a job. Whereas right now there are plenty of jobs. So the best thing that could happen to you is you get laid off now while it's still easy to find a job. But that will flip in time. And when that flips and reports start realizing, that is like the jobs reports and CPI reports start realizing, oh, okay, the Fed's work has successfully slowed down the economy. Now inflation can move down, which tends to be the most lagged result, is inflation going down. Then we can go back to being bullish about markets. But as an individual, this is the time to save money, to build cash, to stay out of margin, to build security. You have to make sure you feel really comfortable in the job you have right now, because you would rather leave now than leave when times are really tough and then it's hard for you to get another job. That would be the worst case scenario, right? So you'd rather transition now, or make sure you're secure at your job now. If you want to make sure you're secure at your job now, ask for a little bit of a pay bump, assuming you've been at your job for a few years, right? You don't want your first year to start making demands or whatever, but assuming you've been at your job for a few years already, maybe now's the time to ask for a little bit of a bump. And usually when you ask for a little bit of a bump, even if you get a no, you'll get some kind of indication on how much the company values you based on what they tell you for your expectations of when you could expect a pay bump, right? So you want to see how valued you are, and that could help you determine, okay, how safe should I feel here, right? So save money, check your safety. Also, build a side hustle of income. I've got a whole course coming out soon, all about elite. It's going to be called the Elite Hustlers University, and it's all about building your income and how we can build more sources of revenue and better sources of revenue and take advantage of business entity tax deductions, tax benefits associated with side hustles or more income or multiple lines of businesses, everything, LLCs, S-Corps, C-Corps, you name it. We talk about everything. It's gonna be really, really incredible. Comes out later this month, but really the message that I'm sending to you is not like a sales pitch because it's not available for sale yet, but it's a message of like, get ready for doing those sorts of things in your own life. So staying out of margin, but also building up your security, building more income, that side hustle income, so that way you could be prepared. Pay a little bit more in taxes now so you could qualify for more real estate next year. That's what you want to do. That should be your focus. Qualifying for real estate, getting into real estate, and really maximizing your opportunity to invest not only in yourself, but also during a recession. Even if that means taking a slow time like the holiday season to get some licenses to increase your actual value as an individual, as a human, as an employee, as an entrepreneur. Those are important things to pay attention to. So my big summary out of all of this is all of these layoffs that we're seeing, in my opinion, first of all, they're all late. These layoffs should have come like 6 months ago, but that's okay, better late than never. I think though, we're gonna see more of this. This holiday season might be a little bit of a disappointer for a lot of these companies, and the fact that we're starting to see Aldi and Walmart talk about rollbacks to 2019 prices is disinflationary and is probably going to lead to lower revenues, which will probably lead to even more layoffs. And I'll tell you when the layoffs are probably going to be pretty nasty. Probably going to be Q1, right after the busy holiday season for a lot of retailers and merchandisers, where they get their big sales in and then they cut big in January. Yikes! Red flag for you as a worker if you're at one of these companies. Big green flag if you're looking to invest in companies that are refining, becoming more efficient, and you're looking for a reason to believe that the jobs market will soften such that the Fed could finally take the foot off the brakes that they've slammed on, so to speak. Anyway, my thoughts on all this madness. Thank you so much for watching. Check out our sponsor link down below, and we'll see you soon in the next one. Thanks. Good luck. Bye.